Hi, welcome back to Equity Masters Stock Market Wrap-Up. This is Rini talking to you from Mumbai. The euphoria created by the surprise reduction in the corporate tax rate faded this week as concerns about the health of the financial sector shook the stock market. The turmoil in the financial sector erased all the gains made by several companies. In today's episode, I'll talk about what moved the markets this week and everything that matters to you and your wealth creation. Let's begin with a look at broader cues. Global markets had a cautious start to the week amid escalating US-China trade war worries. In the midweek, global shares tumbled. New York markets slumped overnight because the United States opened a new trade war front by saying it will impose tariffs on $7.5 billion of goods from the European Union. Meanwhile, Wall Street's main indices suffered their sharpest one-day declines in nearly 6 weeks on Wednesday, after employment and manufacturing data suggested that the US-China trade war is taking an increasing toll on the US economy. Adding to the selling pressure in Asia were long-running concerns about the impact of increasingly violent pro-democracy protests in Hong Kong that saw a demonstrator shot and wounded by police on Tuesday. Back home, the stock market remained under pressure. Rumors of more debt distress, muted auto sales, and weak macro data weighed on the stocks. India's NBFC crisis sucked in more financial firms this week, eroding a stock market rally last week. The BSE Sensex posted its third day of losses on Tuesday, ending a surge since September 20th. Meanwhile, in another booster for the economy, RBI cut its repo rate by 25 basis points on Friday. The reverse repo rate was reduced to 4.9% and the bank rate stood at 5.4%. Real GDP growth for FY 2020 has been revised downwards from 6.9% in August policy to 6.1%. Now the question is whether this rate cut will help revive the economy. Let's wait and watch. But as per co-head of research Tanushree Banerjee, the Indian economy is in the middle of a healthy transformation. She says, and I quote, "The India story will be well and truly in motion." How do you benefit from this? You see, the stock market in the long run reflects the growth in the Indian economy. Businesses that have seen such cycles in the past will know exactly what to do. Leaders in their category will be the first ones to take advantage of this super cycle. These are what I call safe stocks. In my Rebirth of India project, I am constantly on the lookout for such safe stocks. Unquote. To find out more about these 7 stocks, log on to stockselectoffer.com. Moving on, banking and finance sector was the focus of the week, owing to which bears seem to be back on the street. Lakshmi, Vilas Bank, Indiabulls Housing Finance, and Yes Bank turned the market sentiments negative. Lakshmi Vilas Bank witnessed selling pressure this week after the RBI imposed operational curbs. The RBI's decision to bring the bank within the prompt corrective action framework sets ceilings and limits on the big ticket and high risk lending. Reports stated that placing of Lakshmi Vilas Bank under the prompt corrective action could potentially hurt its proposed merger plans with Indiabulls Housing Finance. The proposed merger of Lakshmi Vilas Bank and Indiabulls Housing Finance still awaits the central bank's approval. Owing to this, Indiabulls Housing Finance crashed nearly 38% during the week. Now how this all pans out remains to be seen. Meanwhile, we will keep you updated on the latest developments from this space. Now coming to the main focus of the week, Yes Bank. The stock of Yes Bank slumped as much as 23% on Tuesday on account of forced sale of 10 crore equity shares, representing 3.9% of the bank's equity share capital. The bank said a large stakeholder invoked shares pledged with it, following which the entire pledge stood extinguished. The Yes Bank stock has also taken a beating recently due to these concerns. Shares of Yes Bank on Monday tumbled 15% amid concerns over its exposure to Indiabulls Housing Finance. And on Tuesday, the stock lost 29.9% intraday. It closed at 32 rupees on the BSE, making it the worst hit on both the exchanges. The stock was down for the fifth consecutive session on Tuesday, with 48.3 billion rupees worth of market cap eroded during the period. The Ashok Kapoor family on Wednesday affirmed full support to Yes Bank, following co-promoter Rana Kapoor's near-complete exit from the bank. Yes Bank shares rebounded sharply thereafter as CEO Ravneet Gill eased investor concerns on the bank's financial position and reiterated its commitment to stable asset quality, retail business growth, and increase in its liability franchise. In another news, government is set to kick off sale season soon. Well, as per reports, the government is getting set for a series of blockbuster divestments, lining up strategic sales in 4 blue-chip state-run companies and firming up plans for embattled Air India. A group of secretaries on Monday cleared strategic sales in BPCL, BEML, Container Corporation and Shipping Corporation of India. Stake sales in power companies THDC India and NIPCO have also been approved. These could be taken over by state-run NTPC. Now in the news from the economy, according to a government data released on Monday, the 8 core industries in August recorded a 0.5% decline in output of coal, crude oil, natural gas, cement and electricity. The 8 core sector had expanded by 4.7% in August last year. In another development, the country's fiscal deficit touched 5.5 trillion rupees at the end of August, which was 78.7% of the budget estimate for FY 2020. In absolute terms, the fiscal deficit or the gap between expenditure and revenue was 5,538 billion rupees as on 31st August. The government has pegged the fiscal deficit for the current financial year at 7 trillion rupees while aiming to restrict the deficit at 3.3% of the GDP. Now coming to automobile sector, the latest automobile sales numbers for September show that the decline continued when compared with the corresponding period last year. In fact, the country's largest car maker Maruti Suzuki witnessed a 32.7% fall in sales, the worst in firm's history. It could sell 1,22,640 units in September against 1,62,290 units last year same time. But there may be silver lining in the form of a month-on-month pickup in sales after the recent round of discounts and offers from auto majors. Industry executives were hopeful that the recent rise in buyer enquiries would translate into sales as Diwali draws closer. Against the backdrop of a severe slowdown and battered sales numbers, the month-on-month data is a source of optimism for the industry. Compared to August, vehicle sales increased by 15.3% on the back of discounts. So on that note, I will stop here. Before I sign off, I would like to know whether you like our podcast. We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Have a profitable week ahead. Thank you.